first reason you might seek minority investment is to raise some capital to do something that you can't afford to do with balance sheet cash or with debt. For example, you might be undertaking a store rollout that requires more than the bank can provide. You might be executing a buy and build where you're acquiring other businesses. You might simply be building infrastructure and working capital ahead of growth. Growing a business is risky, and actually if you've got all your financial wealth tied up, it means that you are actually more reticent to grow. So we find the opportunity to take some cash off the table almost resets the risk appetite for those teams we back. It gives them the freedom to grow their business without worrying about their personal wealth position. It's vital to be patient as an investor. When investors back businesses, the starting point for management teams and for the investor is that we'll get from A to B in a straight line. That actually rarely happens. So quite often we'll get to A to B, but we might go via C on the way. We have seen that across 400 portfolio companies. So it doesn't worry us when a business takes that trajectory. We're very used to it. Patient capital means that a management team is working to its timeline. It's not working to the investor's timeline. It also means that as an investor, we can remain invested for longer if it's what management wants to do and if it's the right thing for the business to do as well. So we won't be rushing to the door for exit. And there are a number of situations where that might be the case. So for example, there may be a bump in the road that the management team hits. There may be a management succession that isn't executed perfectly first time, which may add a couple more years to a journey. My favourite example is always where a market is moving in the company's direction and therefore the management team turns around to us and says, well, actually, I don't want to sell now. I want to remain invested for a few more years. So as a portfolio company with BGF, I feel you get a lot more than just money. We've invested in over 400 companies to date, and we've seen a whole multitude of situations where we can bring skill to the table. I sit on 4 boards, very, very different sectors, different reasons why the businesses have raised capital, but a huge amount of commonality between those boards. And if I can't find the answer, then either there's another investor at BGF who can find the answer, or we have a very large network of execs and non-execs we can speak to help that management team. So a lot of investors are in and out quickly. They might take overhead out, they might build up profit and then sell it off a higher number. And that's not what we're trying to do. We are actively trying to build businesses that are fit for exit, but also fit to scale after exit as well.